Epstein with your financial market wrap-up, and this wrap-up is for Tuesday, the 30th of August, 2022, just after 5:40 p.m. I have a grin on my face. I'm smiling. I stuck my neck out here in these videos 2 weeks ago plus and predicted on 3 of the 4 stock indices where you had taken either the 100 and the Bollinger Band or the 200-day moving average of closes, 100 and 200-day moving average of closes that intersected with the Bollinger Band. And I said, I think you're going to make a trade top. I did not know that you were going to fall in no time at all, 8%, and give back in many of the indices half the gains that you've made since the June low. The big argument is, does the market go for the June lows, or was that the trade low? We know a bunch of people stuck their neck out when that was made correctly. I want to make the fact set and some of that. They did a great job. Tom Lee, who I've knocked a bunch of times, he called it. So I'll knock people and I'll praise people. That was a darn good call, any way that I want to look at it. But I also called the trade top. Now the big argument between the bankers is, do we go for these lows, or was that it? The market settles into sideways action. Well, September is the worst trading month of the year on a historical basis. That's number one. Number two, I keep looking for the clues. You had the JOLTS number today, the employment ads for people, jobs. 11.2 million at the last day that we're getting here. Oh, my God. So as much as I'm hearing Snap and other companies cutting back, along the line here, there's a lot of help wanted ads. What if the jobs data comes out, they're looking for 300,000 to 325? Those type of numbers, and God forbid it's sharply higher like it was last time, just gives the Fed more ammunition to say, listen, we told you, I told you is what Fed Chair Powell's got to say. I told you we have to take this down. We have to destroy a lot of this demand. You can't destroy that demand quickly if people keep getting jobs, higher paying jobs, have more money in their pocket, and they're chasing fewer goods. That's inflationary. Any way you want to cut it, that's inflationary. So the pain hasn't come yet. And that leads me, the opposite camp of the people that are thinking that maybe we've seen the lows. I'm beginning to wonder. I would say that if we see mid-month September, when we get the readings for August on the CPI, if that comes down half a point, and if the jobs data this week is a surprise, not getting the 300,000 lower number, I might want to rethink that, what I just said. Maybe you don't have to go for those lows. Maybe we start setting in that trend. I'm fearful that it's the other. This JOLTS number today, I was waiting very quietly to see what it would do. I didn't want to see a strong number, and I did. I'm concerned. Okay. So when we come to the S&P, what number did you go back to? How long ago did I tell you? If we're correct, we're going to go back and fight a battle against the 18-week moving average of closes. It's exactly what this market is doing. When we look at the daily chart, you can see the action down. And now you want to take a look at today's high. 40.72 is taken out. You probably get some more short covering. It's an outside day down. If you had that happen, you look to see where the moving averages are because it's right on the 100-day. If it clears it, maybe you go back to 41.69. But I think the pros will sell it if they get it up there. The chart action would be compelling to do that. Maybe. I want to see these reports. They're coming out right in front of us. Let's see at least Friday's jobs data to make that decision. The other part that leads me to think, hey, you could bounce here, is you're on the Bollinger Band. Now, markets stay above or below these black lines, but 5% of the time. Learn to work with them. If you then learn to work with them and you tie together momentum, I teach you the timing of it. Now, the beauty of the timing of it with the slow stochastic and the readings I put in them, mine's a bit different than yours. Subscribers to my services, I tell them how to modify theirs. It's very simple, and you do it. The numbers won't change. It's a different way to do it, and I do explain it. I'm not going to do it for you because I don't run everybody's charting service. I know what ours do, and I know how to do it there. So that's exactly what I'd be looking at. and saying to myself, okay, very interesting. Oversold, down. The battleground's now the 100-day on rallies. If you can clear the 40.72, maybe you open up a little more. What would do that? Well, it could either be short covering in front of the report or the report itself. A surprise that what if they revise from 528,000 to 350,000? What if it's not 300? What if it's 200 for the new numbers? I don't know what they can be, but I'm giving you scenarios. In the NASDAQ, both numbers are under 20, but you have to do that several days in a row to embed. If you don't understand the word embedded and all, after I'm through tonight, there'll be an add up about the enhanced Bollinger Band course, some explanation about it. You can go to our website under the word always, education at iraepstein.com. It's pretty simple. All right, so that's your battleground. So we're seeing a couple of things here. So far, we're saying that the S&P, the resistance, if you bounce away from the Bollinger Band 100-day average, and we're seeing, and let me get back if I could here for it, and we're seeing in the, I'm going the wrong way, just my fault. Okay, and we're seeing in the NASDAQ the same thing, from the Bollinger Band up there. Okay, what about the Dow? Whoa, same pattern. Bollinger Band to the 100-day average, oversold, all three markets. What about the Russell? The Russell, for the first time today, hit the Bollinger Band in the 100-day, and that should be where the market tries to find its support. So unlike the other two, because that support is underneath the market, as you can see, you're at the support level. In the VIX, move my finger back where it should be, you're fighting here. Now, I brought up something yesterday. Normally, you get markets really scared, the VIX takes off. You have been at higher levels just recently. This is a very subdued rally, which is why I'm thinking in the back of my mind, is the VIX telling me that maybe the stock indices want to put on a rally? I'm tremendously bothered that the VIX isn't a lot higher. I don't know if that's just because people don't want protection right now. I don't know if it's because we're just before the Labor Day holiday and the A-League traders they're gone. People are doing other things. Before I was doing this tonight, my wife says, hey, let's go for a walk. I said, no, I got to record. But that's what people are doing. Everybody wants to take their last days of summer because it's absolutely gorgeous. At least it is in Chicago right now. In the T-bond, you're still embedded. Now, at some point here, what's going to happen, you'll get a short covering rally. The resistance is 139.1 to 139.9. You'll have to lose the embedded reading probably to get up there, and it would probably turn before you get to those numbers. Not if you go into the jobs data. That could be another new event. 10-year note, the same. A lot of traders are saying, you look at this and you understand that the popular spread is the 2-10. Now, once you get to the 20 years and the 30 years, that is where people think the worst case has happened in those markets. Just understand what people are thinking. In the dollar index, if you lose the red line, gets under 79 on a closing basis, then I think you're coming back to the 18-day average. Don't do that and just hang there, and I can look for higher prices. And in the euro, you're already flirting with losing the embedded reading. Tonight, even with the market right now down 3 points, you got a 23 reading. If we come back, let's see if I can get this to work for me. It should. Yeah, there we are. How did you finish today? At 20.1. You see that? It's not over 21, but that's a warning sign. You need a big break tomorrow if you're going to stay short this market, so be careful in it. British pound is still in the bear camp. Rally's probably still going to be sold. They're looking at hellacious inflation by October. You're hearing from the bank governor, 12% numbers, okay? No economy can withstand that, no Western economy. That is what you call emerging market inflation, not these type of numbers. Rallies, if you don't make a lower and low first, probably going to get sold in that market. Bitcoin. Why would anybody own Bitcoin in this environment? I don't get it. It pays no interest. It's like gold. It's way more speculative than the gold market. And you have none of the inflation stories or anything because the government's there fighting all that. Plus, they're out to regulate the heck out of it. Let the other guy own it. And I realize you're going to write me and tell me, Ira, you don't know what you're talking about. And you're right. I didn't know what I was talking about when it was $1,000 and it went to 69. I agree with that. And it's fallen from 69,000 to 20,000. I get it. I just don't want to own it. That's the difference. As an investment, I don't mind trading. I don't want to own it as an investment. I don't believe in it. That's my problem. In Brent versus WTI crude, coming up, okay, you got a difference here, but I have no reason to hang a hat that it has to narrow in from there, other than you got up today and you hit, again, the 100-day average in green, the Bollinger Band outside day down. So the support should be the 18-day average. You were overbought, never embedded. Tells me that the pros came out here. I know that you think I'm a nutty, right? It's right here. I don't think it was here that the pros came out. I think it was there. And I think they've been sidelined since then. And I think this is where they came out here. And this was just the gravy that the market did. So in gasoline, well, we know the story and the wildness that's going on in this market. Off of one day we hear that in Whiting, Indiana, we're not going to be able to get the fuel grades we need. The next day it's not as bad. It is craziness. I stay away from that. But what I did think, and if you go back over the past 10 days, I have said I don't think you're going to get demand off of Labor Day. Stay with what I said. Kids went back to school. People aren't driving. The price was too high. Their stomach put into a knot because of all that happened to us on July 4th, and then watching for near 80 days. Prices fall almost every day on gas body. I told you that was going to happen. Okay, nat gas has finally proven me right. I had one of my investors write me back over here, and I didn't think that you were going up for that peak, and it did, okay? And I just said, no, none of my work is good. It's still overbought. I think you're going to return down at least to the 18-day average. The market got ahead. I certainly wasn't going short. He was considering buying. I think I did the right news in telling him what I saw. So, and it bothered me. And that happened probably a week ago or so. And, you know, when you ask, I don't walk on water. I just try to be more right than wrong. And I felt bad. It's going up, and I told him not to buy. Now I feel real good. But he, of course, might have bought there and gotten out, so I'll never know. All right, he'll tell me, I'm sure. And that's the thing. My subscribers write me, and I respond. And I have an awful lot of subscribers. I make a certain amount of time during the day to get to as many as I can. People will say, Ira, I'm your subscriber, not on YouTube, paid subscriber. Would you tell me what you think of blah? One of them was recently an insurance company. I said, here, and I'll create a 1-minute video. I'll walk them right through the chart, everything I'm seeing, I sent it. People love it. Okay, so gives you an idea what I do. Well, take the Enhanced Bollinger Band course. You may want to become one of our regular subscribers. I'm telling you, a cup of coffee a month. If you get 2 cups of coffee a month from Starbucks, you're paying more than my subscription for my morning future subscribers. Is that fair enough? Craziness. I'm Ira Epstein. You have a great day. Welcome. I'm Ira Epstein, and I'm here to talk about my Enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time, and on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all 3 of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, If you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.